Hello entrepreneurs, it's Michael Mort again from Argent Place Law with a law firm for entrepreneurs where we're looking out for you. In a different post, I talked about the difference between LLC and S-Corp. S-Corps have really nothing to do with corporations. When you form an LLC in your state, you can choose with the IRS how to be taxed as a partnership, as an S-Corp, or as a corporation. Today I want to talk about why you want to choose S-Corp status in most cases, not every of course, but the reason you want to choose the S-Corp status for your federal taxation filing in a simple statement is because you can pay yourself a salary. You see, the default rule for taxation, if you just form an LLC and you tell the IRS, I have an LLC, their default way to tax you is one of two ways. If there are two or more members, two or more owners of your LLC, the default is it will be taxed as a partnership. If you are have a single member LLC, if you're the only owner, then the default is the IRS is going to ignore the LLC. They'll treat it for taxation purposes as if you had a sole proprietorship. You'll file a Schedule C on your personal return. All of the income of the entity will flow through to your personal income tax return, your Schedule C. In the case of two or more owners, the entity, the LLC, will have to file a partnership return, but still, all of the income will flow through to the owners. Both situations are undesirable. Most cases, you want to pay yourself a salary, and you want to leave some money left in the company that's not going to be taxed by FICA. You want to leave some money left in the company for expansion, for doing marketing, or for further activities next year. There is another reason. If you are in business with a partner, you may do different amounts of work. Or for example, you may even have a silent partner who only invests money and expects to get a return on an investment, but you're going to be doing all the work. In that case, you definitely want to have the company taxed as an S-Corp so the entity can pay you a salary and not pay your partner a salary. So you can devise a compensation plan which allows you to take income out of the company for doing the work that you do, and then whatever profit is left over will be shared between you and your partner or multiple partners as owners. That would be a distribution from profits unrelated to the work that's actually being put into the company by you. So the bottom line is you want to create your entity, the company that you're going to work under, as an LLC in your state, and then you want to file an election with the IRS to be taxed as an S-Corp. It's not very difficult except for that strange name that they used at the IRS, S-Corp, that has nothing to do with corporations. Anyway, Michael Mort here with Argent Place Law, the law firm for entrepreneurs. Hope you had a good time listening to this because I had a good time telling you about it, even though it's taxes.